Hey guys, this is Market Update. So over the last 6 weeks or so, we've definitely crashed and capitulated out from all of the euphoria that we had. And that's a really good thing. If you're still here, if you're still watching this video, then you're an investor and you want to actually make returns in the market. All of the euphoria up here, meme coin mania, etc., all of that's indicative of a euphoric high, but that's not reality over the long term, right? So yes, look, we're down, 25, 30% maybe we touched, but that doesn't matter. If you look at Bitcoin in the S&P, we're down 16% from the all-time high. And usually we have these big breakouts in real bull markets. I would suggest that what we've actually had up until this time, if we're looking at Bitcoin valued in the S&P, which is really the benchmark, right? Then we're actually just looking at recovery, and we've tested the breakout and we go higher in a real bull market. So I think the bull market is actually yet to come. I don't think we just go V-shaped recovery up here. There's a lot of real stuff happening in the economy, changing in fiscal policy, changing in geopolitics. That's going to take time. It's going to grind out. But we are investors and we want to outperform the S&P and the NASDAQ because Bitcoin is an index and that's what we need to outperform. And being here right now, when prices are a little bit soft, is how you outperform. I want to go over some longer term data in this video for investors, really. If you do trade crypto though, or invest, Bybit deposit bonus up to 30,000 in the description. Anything you deposit, they'll give you a bonus. Click the link to sign up. And then if you can't trade on Bybit, trade on Apex, which is Bybit's DEX. Just trade straight from your wallet. You get a permanent fee discount on there and a small deposit bonus right now as well. Link in description. I actually prefer times like this when prices are a little bit soft and a lot of the stupid narratives are just not there anymore, like meme coins or anything else. People use the attention of high prices to sell you stuff like memes and they make a lot of money off that, but that's not investing. That's not what we're here to do, right? So long term, we want to invest in an index that preserves our purchasing power over time or even gains purchasing power for us. So the way we would do that is by outperforming the S&P. S&P top 500 stocks, they produce everything that we need. So how would we measure our performance? Outperforming the S&P or even the NASDAQ if you're a younger investor, right? Because NASDAQ just outperforming stocks. Tech is the industry that outperforms most other things right now. So that's what you'd be in to get outsized returns, slightly more volatility, but then Bitcoin even more, right? Even more outsized returns, even more volatility. When you look at it versus the S&P, have we even had a bull market yet? I would say that we've just recovered from the trend, right? You can see that after a really, strong bull market and outperformance, we usually come back to this trend, and I wouldn't say we've broken out. We haven't broken out past the previous all-time high that much. This is valued in S&P, so Bitcoin valued in S&P. That's what we want to outperform, right? If you're in Bitcoin, you are outperforming the S&P 500, which means that you are gaining purchasing power in the S&P 500, which are the companies that produce everything we need. So how would you measure outperformance of Bitcoin? For a 12-year time horizon, diligently dollar cost averaging into it and gaining purchasing power versus the stuff you want to buy. Actual wealth creation. So I think we're in a really good spot long term, right? And look, this isn't the top of a bull market. We're actually just recovering and coming into a resistance zone, which you would expect some bouncing around. We've just had a deflation from all of that hype, which is great. This is the time investors actually go to work, be diligent, come in at slightly better prices. But look, we're near all-time highs anyway. And this is insane. Risk versus return for all of the assets that you would invest in. Right, what assets can you really invest in? I think there's like a few. There's a house, S&P, NASDAQ, Bitcoin, and then some around the edges. That's it. The financial index, your savings tool over time. Look at Bitcoin up here. This is insane. You have to have some, and how much you have is dependent on the volatility and the time horizon, but not the asset. It's a proven asset at this point. Mag 7, which is basically NASDAQ, right? All of the returns of the NASDAQ, mostly Mag 7. Bitcoin outperforming them. So how much of this one do you want versus Mag 7 or the other tech stocks? Tech stocks are down. Bitcoin's down from all-time highs. Buy the outperformers when prices are weak. That's how you make returns. Inflation here as well is not 3.8%, is it? Inflation is the rising price of the stuff we need to buy over time, which is basically the S&P. The S&P is the hurdle rate. S&P, around 10, 12% a year. Maybe inflation is a little bit below that. So you're looking real inflation of desirable things that you want to buy over time, 8 to 10%. So you need to outperform that. S&P is great. Mag 7 better. NASDAQ, if you want that. Bitcoin up here. So it's pretty clear, right? Long term, just get involved. Buy when prices are slightly weak and then just wait. We're going through a transition phase right now, but it's happening and we all have to deal with it. Over the last few years, the government in the US has directly stimulated the price level, creating a lot of debt, pushing it through the economy to stimulate prices higher. So the premise here is that the price of everything valued in fiat currency must always just go higher over time because it's a debt-based system. valued on those assets. If the assets go down, all the debt becomes insolvent. You can't sell anything. Credit markets dry up. That's a financial crisis. So that is what the debt-based system is always trying to avoid. Prices must always go higher. So if the government is pulling out their stimulus and saying we don't want to spend as much, or we're going to try and cut that, right, that will drop the price level, because the price level is as it is just simply because of the stimulus. So if the price level comes down, that means inflation comes down, GDP comes down, wages come down, stock-based compensation goes down, stocks and Bitcoin and housing, everything else goes down, valued in the fiat currency, which is a financial crisis and recession, which everyone gets scared about. On the other side, we're just waiting for the central bank to actually do its thing as well. If that happens and say, well, we're going to drop interest rates, we're going to stimulate a little bit, they have to do that because the price level must always go higher. And if the government is doing it, the central bank must do it. We all know the game. Long-term investors know that game, and we know that there is no way out. Look at interest expenses here. This is defense spending, health spending, gross interest in red is going insane. They need interest rates lower. They need to crash the economy a little bit. They need to get that data weak, and then they'll stimulate again for sure, because you can't draw it down, because if you do, everything goes bankrupt, and that's obviously no good for anyone. So we just have to agree here that the currency has to debase by 10% a year. And it's probably better if the central bank does it versus the government, because the government getting too big just creates a huge kind of weight on the economy anyway, and the spending is profligate. Whereas if you do give the free market some opportunity to invest, maybe they can try and get out of it with inventions like the NASDAQ, Mag 7, AI, etc. And that's actually something they can invest in and try to outperform the hurdle rate, which is that 10% inflation. Austerity with 120% debt to GDP, twin deficits. So mortgage rates are actually higher. The 30-year fixed mortgage rates, 2 basis points higher week over week, despite the stock market being down. Why? Austerity as in the government saying we don't want to stimulate GDP anymore. The government's literally saying we want to cut spending. What they're saying is we don't want to stimulate GDP and the price level anymore. When you're indebted like this, that means the price level falls, which means revenues fall and GDP falls, but your debt stays the same. Not good, right? So that's why the 30-year fixed mortgage is like, well, what they're going to have to do here? Unsustainable. So eventually, if they want to carry this on, eventually the price level is going to come down, because the only thing keeping it higher is the stimulus. So they're going to bring it down. Eventually, the central bank will have to step in. Unfortunately, we have to go through this period of volatility and markets getting scared, testing them, testing how much they will cut, if they can cut, and everything like that. So the long term is that you have to be outside of that system, because there is no benefit of being inside it and having savings there. So it's the S&P, the NASDAQ, Bitcoin in your house, and you can choose whichever percentage they make up in your portfolio. But that's really the game here, right? Just outperforming whatever this mess is, because it's not going to be good if you're in it. The real game with Bitcoin right now is position sizing, because all of the questions about the network being successful or not, or the asset being desirable, all of that's done, right? The US has a stockpile. ETFs are the best performing ever. So now it's about individual position sizing and volatility in your own portfolio. So if, let's say Bitcoin outperforms the S&P by 2x, well, you can put half as much in, you get the S&P performance. So how much do you want in, and how much volatility can you handle? Can you handle being drawn down 50% for 6 months? Because that happens all the time with Bitcoin, right? So it's about position sizing, not over-investing, making sure you have cash flow for those times where Bitcoin is drawing down. So that's the important thing. That's the game, sorting that out. Not is Bitcoin going to be a success. It is a success. It's desirable, and the long-term growth trajectory is extremely clear. So it's about position sizing. If you do trade though, Bybit deposit bonus down below $30,000 if you click that link, and then Apex deposit bonus and permanent fee discount on Apex as well. Just trade directly from your crypto wallet. All links down in the description. I'm James, this is Money GG. Cheers for watching, and I'll see you in the next one.